Bang! This is my third consultation call with Trade Brigade, and this is episode 3, part 3 of the new series that I'm going to be making. And this video, Trade Brigade is going to be giving me insight and he's going to be giving me tips when it comes to the concept of being able to chart key levels, looking for setups at C level, and being able to chart areas of support and resistance. For those of you that don't know, charting key levels and support and resistance are just basically putting on the actual chart that you use, whatever trading platform you use. Me personally, Thinkorswim, when you look at the candles, you see price acts funny or it's showing something interesting happening at this price. And when it reaches this price, you become more interested. This is something that you need to do from the higher time frame to the lower time frame, all the way from a weekly time frame. Sometimes a high is a monthly time frame, weekly, 4 hour, 1 hour, etc. You want to be able to do that on a regular basis, and you need to be able to do that. It's a key. Everybody has their own style of trading, but I do believe that for every single trader, no matter what, this is something that all traders need to learn. And again, the thing that I think is non-negotiable is learning how to do this and understanding this concept. This is literally the first thing I ever learned from the first trading course that I ever took. And every single mentor in one way, shape, or another from all areas of life talk about this concept and do it in some way. Now, through my 2 years of experience, I've learned how to properly chart and set up the right way. Again, it is something that is kind of you may get wrong at first, but you have to experiment and see what works best for you. And again, it'll take a lot of time. For me, it took a few months to understand it roughly, and now to really master it and to look how to do it. It's taken me 2 years of very much hard work, and I do believe I can speed up the process with these video guys. So with that being said, that's all I got for today. Stay safe, stay green. Day trading knockouts out. Don't forget to like and subscribe. Peace out to my fellow millionaire day traders.
So the next question, let me see here. Oh yeah, so the next one, it was actually about a video that you made on April 25th of a few weeks ago. You had 4140 as a key level of support, and let me see. Yeah, it's basic. My basic question about it is, when I see your key level of supports where you fill it in with those like very faint gray bars, kind of. Yeah, it's just making me wonder: am I charting support and resistance correctly? Like, how exactly do you do it, and what is the uh, requirements for you to be able to chart a specific level as a support or resistance area?
Yeah, for sure. So support and there's so many different people call it supply demand, people call it support resistance. You can call it whatever you want, but at the end of the day, we're just mapping out areas of interest in the market. So to me, if we're above an area of interest, it should in theory act as support. If we're below, it should act as resistance, and you're watching for the reaction around that area. Now in the ES, and really any index product at any price point, really anything that's more than, let's say, like any stock trading north of $50 or whatever, it's going to be a zone, right? We can get pretty darn close, but we're never going to actually nail like, okay, this is the exact top, right? You can see here that we wick through the top of the zone a little bit and then back off and then break it, right? So it's always going to act as a zone, an area of interest. This lower wick comes kind of into the midpoint of that zone and then goes away. So how I'm mapping these areas is on the hourly time frame chart, and you come in here and you turn off the extended hours, because what we care about most, and you know this from Jim Dalton, right, is the regular trading hours session. You can look at market profile patterns that happen from the overnight session, but they do not hold nearly as much weight as regular trading hour session. So the same kind of applies for determining key areas in the market. And this 4140, 4138, as we've been calling it, comes from, this is really why the level's on the chart right here. It led to the strongest breakdown first that attempted to get out of the balance range in the downward direction. Now, the level has been weakened because we recaptured it with not even a hint of a pullback in this instance. And then it's been weakened again because we sliced right through it here. But the reason it remains is really based on Friday's activity coming up underneath it once again. So the 4140, right, in theory, everything always boils back down to like following trend on some time frame. We know on the daily chart right now, there is no trend. It's just choppy, sloppy back and forth. But as we drill down through the time frames on the hourly, for example, just a key level that could have, in theory, produced a lower high would have been that 4140. We know that there's some choppy interaction here. It holds as support basically. And once again, this is a zone. This is not like, it doesn't have to be 4140. It doesn't have to be 4138. It's just this area. So this area is kind of holding, right? And then on Friday, we get this. That's why it's a key level for today. Did I have any idea that we were going to get a liquidation break that goes right to the level and then bounces right off of it perfectly? Absolutely not. There's no way of knowing that type of thing. But the area just being an area of interest would tell me now, okay, we have technical traders who are interacting with this market. I mean, longer term shorts who are looking to send this thing to zero, they don't care about this previous high, right? They're going to sell this through the high and they're going to keep selling and selling and selling, whatever. So it's just going to add some context into like what we do for tomorrow. So for example, in tomorrow morning's live stream, you'll probably hear me say something like, this liquidation break actually strengthened the market, right? Because it takes short-term sellers out. Short-term sellers who are expecting a bigger breakdown on that move are now completely wiped out because we retraced 100% and closed back strong above. So to bring it back to the original question, we're just mapping these areas of interest. And for me, they always come from the hourly time frame chart, and they always come from candle opens and closes. And we're not going to don't cherry pick the wicks. For example, what do I mean by that? If you look at this here, right, it might look like we're cherry picking the wicks in this example based on these moves, but this is after the zone is already established based on this rejection right here. The open and close of those two bars on the hourly chart define the level. And then as we move forward through time, it just so happens that these upper wicks test the area and we back off on the hourly, test the area and back off on the hourly. So like here's a really obvious example on the SPY, for example. I got to type that one in. Not linked, but here's the SPY, right? If you look at all of my levels on the SPY, notice what they all go through. They don't go to upper wicks. They don't go to lower wicks. They go right through opens and closes of hourly candles, right? This up here, you don't want to cherry pick that upper wick because remember that an upper wick does not represent acceptance. The acceptance is in the body of the candle. All right. This is a test. And you could, this is where a little bit of discretion comes in from a time frame perspective. A swing trader would probably look at a daily chart and say, okay, I care about opens and closes on the daily. A micro scalper who cares about, catching 10-cent increments in the SPY might look at something like a 15-minute chart and draw out every single pivot from a 15-minute chart. For me, the sweet spot, and I would say for most people who are looking to trade, without being like, overly attentive to a 1-minute chart at all times of the day, this is kind of the sweet spot. The hourly chart opens and closes here will give you like a broad zone to be trading for, right? Because we know if we get some sort of reversal off of 413, okay, we're coming back down here. Like on this chart in particular, I don't have this level because there's no, you could get the Friday open and close, but it's not as clear cut from back here. Whereas in the ES, it's more equivalent to this area, right? So that I suppose is where the levels come from, the open and close of hourly bars, not the upper wicks. And once again, the idea is not that it would be great if the market, tested 413 to the tick and then backed off aggressively. But the thinking behind this is that, if a pattern unfolds here, let's say I've shown you the Trinity chart, right? The 3-pack, this one. I believe we've talked about this in the
you showed me that.
Yeah, in some of the other calls. So for example, let's go back to SPY here. Like I'm always looking at the hourly to say, okay, we're coming into an area, and then it's all about like it just requires a 5-minute indication around that zone. So in this example, this break through it would not be like a long entry to go long SPYs here on the break of the level. And instead, because we're testing it from the bottom up, it would be, okay, is this going to provide resistance, right? This, is this going to turn into a double top? That's a really bad example because the liquidation break neckline would be all the way down here. But, what's a good example? Like I suppose right here on the Friday session, right, when the stop out comes, it's like if you're monitoring from the hourly chart, there's no real stop that should have taken place there. And once again, I get that, we had a stop loss in place here, we had a stop loss in here, but I'm talking about from just a zone perspective, right? It's not so clear cut that this should have warranted a full removal from the position if we were using the assumption of, this as the original risk reward ratio on it, right? It's a retest. It's a mild retest of that range. Now, once again, this boils back down to being willing to hold into that full target, right? If you're someone who can't hold into that full target, and this is just something that you have to know about yourself psychologically, if that's too painful to hold on to something for, however many hours that was, 4 hours into the close, basically, then yeah, of course you're going to have tighter risk reward on your trades. And for example, when this unfolds, maybe the stop is here, your entrance is over that high, and you're looking to sell at this is your 2-to-1, 3-to-1, right? And that's a different story. So hourly opens and closes. They're going to offer zones. They're not going to be perfect to the tick. And just the general gist is to look for resolution. Like, I would say the stronger trade on this particular SPY chart would have been the higher low that was being offered here, right? Why? Because there's a clear break of the level, and then there's a higher low that happens above the level. It would be a different story if the SPY did something like this and sort of took the level, but then came back down underneath. Now you'd be thinking of this as a rejection of the level instead of a trend reversal, where or I shouldn't even call it a reversal, but continuation over this with the higher low at 410.35. So the level acts as more of a zone than just like strictly to the number. And I'm sure, you kind of know that, I'm sure, already based on trading for a little while, but those are my comments, I suppose, on levels, zones, and how to map them. Does that answer the question? I feel like I kind of went on a little bit of a sidebar there, but does that get to the gist of what you were asking?
Yeah, that gets to the gist. I've watched you enough to understand how you go about teaching and stuff like that, so it's not a big deal. But in regards to like actually, you send me the recording, so I give you my full attention here, but sometimes there's some things I don't understand, so I'll just watch it back over and over again.
Gotcha. Yeah, cool. That's